okay, you notice that there is a clear area of support right here, or I'm sorry, resistance right here. Okay, there's also an area here. Okay, and then you can draw a trend line here. Okay, draw you a trend line there. All right. So what's important to understand is that above support, above resistance, and below support is where liquidity lies. Okay, big money, not you and I. Big money uses these movements here. They use these lateral movements to either accumulate or distribute. Whatever they're doing, whether they're getting rid of their orders or they are accumulating more orders, they are gassing up and initiating the trend. Just think of them, when you see a range, just think of them gassing, just think of them stopping at a gas station and gassing up a truck or a car, okay, to get on the road and get going with the trend. Okay, that's how I think of it, because they're going to use this lateral phase to quietly accumulate or distribute. And when positions at these price points are in their hands, more their hands than your hands and retail hands, then they can aggressively move the price in the direction that they want to move it. Okay, so how does that work? Let's check that out. So we're all familiar with the order book. Okay, we're going to just go over this real quick. Ask. Okay, the ask is the number, the price that the seller wants to sell for. Okay, that's what he's willing to accept right now. Okay, the bid, okay, is the highest price. Oh, I did the ask wrong. Ask is always going up. Okay. The bid is the highest price that they're willing to offer, that someone's willing to buy it for, and that's going down. Okay, what you have here is the bid-ask spread, and right now in this example it's going to be $1. Okay, so the only way a trade happens is if somebody decides over here to up their bid, pay the ask, or the ask people decide to lower their ask and take the bid. It's the only way a trade happens. Okay, remember that limit orders are passive. Okay, they just rest in the market. They can't move price. I'm going to call those resting orders. Okay, market orders, as you remember, are active orders. Okay, they facilitate price movement. Okay, what else facilitates price movement though are stop orders. Okay, and I'm going to explain to you how that happens here in a second. Okay, so this is a subcategory of market orders, because when your stop is hit, it becomes a market order. All right, so you're moving along, you see this range start to develop. Say you notice it about right here. Okay, but people have been selling it aggressively. Let's do the selling in red. People have been selling it aggressively, selling it. Okay. So what happens above this? Well, above this, in order to get out of a sell trade, you sold. In order to get out of a sell trade, you have to buy to get out of that trade, do you not? So you have buy stops above the market right here. Okay? What will often happen is, okay, before the price will go down, before it will go into the direction that you think it's going to go, okay, it will come up first to grab your orders, okay, and then take them down into where you thought it was going to go. And it's, you know, it's called a stop hunt. It's the most frustrating thing, right? This is done on purpose. This is done purposely, because it's common sense that if you don't have a lot of money and you're trading, how much can price move against you at this upper level? Okay, there's stops all over this upper level. Okay, there's stops, retail stops all above here. Okay, so they're not just hunting your stops, they're hunting other big money stops too. But the point of it is they're looking for the liquidity to fill their orders. Okay, because when they initiate a move, to go down, all right, to go down out of the range, to break the range and go down, they want to make sure that there's no one trying to buy down here. Okay? So they're gonna perform these tests in the marketplace. They're gonna test supply, they're gonna test demand. But what will most likely happen here is this move right here that will take you out of your position, it'll take you out of your trade. So when your stop is hit, it becomes a market order. Okay? Because what you're telling the market is, what you're telling the computer, your broker is, you get stopped out, get me out of the market. Get me out at the next available price. I can't take any more losses. Okay? That's why it's called a stop loss. What happens when you hit the market button when you're normally trading? When you're buying, don't you have to hit the ask when you're buying? Because that's the next person that wants to sell. That's what he's asking. So if you want to get into the market right away, you got to hit the ask. When your stop is hit, you are essentially hitting the ask. Okay? So you are actively moving the market up for them. Okay? They don't want to go up though, they want to go down. They just want your orders. So if you're buying on the market, guess who's selling to you? They are. Because they are initiating sell positions in this area. Now you say, okay, how can they be buying and selling at the same time? It's very simple, guys. If your order is a market order, okay? If your order is a market order, all they have to do as they're buying this up, as they're aggressively buying this up to reach this pool of orders, all they have to do is place orders above the market. Okay? They just place limit orders above the market. Because your market order is going to be matched with a limit order. Their limit order. Okay? So you agree to sell to get out, and you have to pay. I'm sorry, you agree to buy to get out. They agree to sell to you at that price because they know, haha, we're taking this sucker down as soon as we have his orders. Okay? So that's what they do. And on the way back down, you have on the other side the same thing built up. Except this time, you had people that bought, buy, and then below, as you know, in order to get out of a buy, when you're wrong, you got to sell, right? You got to sell. Okay? What happens when you sell? Your sell turns into a market order. And we know when you hit the market, it's called smashing the bid. When you're selling aggressively, you're hitting the bid. Okay? You're saying, I will sell the market. Okay? I want to sell to the next person that wants to buy. The next person that wants to buy willingly, he's at $14. So you have to sell to him. Okay? So what happens now when this price comes down here? They come down, they smack your orders, they turn into sell market orders, and then they hit the bid all the way down. Well, what happens now? You are selling to them down here. Because all they have to do now is place their orders in the market. Okay? And you're going to have to come down and transact with them. Okay? So what just happened? They tricked you out of your position up here when they hit your stop. They sold at the highest possible price because you had no choice but to pay it because you were terrified and you had to get out. Then they took your order, they gassed up the truck, they took your order down here, down the road, okay? And everyone that saw this breakout, everyone that saw this, they got stopped out on the way down, okay? So they're closing orders all the way down. But the real pool of liquidity is down here. Okay? You're the counterparty to all the orders. Okay? You're the counterparty to all the orders that they just sold up here. Okay? They take the orders from here. You had to buy. They wanted to sell. Okay? They came down here with the orders. they have the inventory now. You want to sell, right? And guess what? They want to buy. And that closes out their orders that they had up here. And this happens over and over again until they are positive, guys. They are positive that the direction they want to take the market, there's not going to be any resistance. Okay? And then you will see them initiate a move out of the range down to where they want to go. And if they discover there's some resistance down here, if they discover people want to buy down here, okay, well, crap, they got to start it all over again. They didn't do a good enough job of absorbing all the available stock because people still want to buy. All right? So what do? Okay, they'll let them buy. Let them buy, let them buy, let them buy, let them buy. Okay, engineer some more liquidity. They'll come check up here again, make sure no one's up here. Okay? And then they will aggressively come back down and take them all out. Because once they've bought, they got to sell. Okay? Does that make sense? So let's go to a chart. Let me show you this on a chart. Happens all the time. Where's this chart at? Yes. Alright, let's go back. I had an example, a few of them that I marked down here. Alright. Price came down here. Came down to this area. Clear level of resistance after 1, 2, 3 touches. Pulled away. Went up. Okay. Came back down to this area. 1, 2, 3, 2 touches here. And then boom. Broke down. Went all the way down here. Went from 42 all the way down here. Now, I'm not saying this is a liquidity grab. This just could have been, you know, them wanting to take your orders. But they definitely made sure that there was no one left below here. Right? Come over here. Nice trend line here. Bounce. Bounce off the trend line. Right here, they come and take it. Okay? Now they knew they were going up here. They knew they were gonna initiate this trend up. Why couldn't they just let you keep your order, right? No, they want it all. They want all your orders. They know that you bought here. They know that you bought here. And if you're still in this position, if you didn't get out up here, God bless you. They want you out right here. They want these orders right here. Okay? Initiated the trend up. Next. Where are we at? They did it to both sides here. Okay? Clear resistance here. Clear resistance. 1 touch, 2 touch, 3 touch, 3 touch. Right here. Looking at this blue line. Breakout. Take liquidity. Boom. Down here. What they do here. 1 touch, 2 touch, 3 touch. Boom. Took liquidity. Again. Took your orders to initiate the move up. Okay? That makes sense? So I wanted to do something cool. I wanted to now replay this. Play it out and see if we can catch it happening on the chart. Let's go to the Dow. Let's make it fun. Let's go to the Dow. Let's go here. Let's remove drawings. Let's go all the way back in the Dow. Let's go here. Let's start a replay right here. Uh-oh. What happened? Where'd it go? No data. YM. Alright, we're going to come back here. Let's go back to May. Alright, so we just restarted the Dow there. Okay, so we're just going to look for lateral price movements, and we're going to just trade with liquidity in mind, okay? So let's try to mark this up to the best of our ability. Let's look for areas. We're not going to use volume profile. We're just going to look for some areas here. We see we got a nice downtrend going here. No, not there. Maybe that's one. Definitely have an area here. See this area here. Support, support, support. Flipped, resistance, resistance, resistance. Classic, right? We don't have anything there. And there's really not much going on here. There's not much going on in this range right here. You got a little bit of a level there. A little bit of a flip there. Resistance, resistance. Broke down. Or support, support, support. Broke down, resistance. Came up. Okay. So let's play it out and see if we can get it to give us a liquidity grab. Okay, so we have something forming about right here. Okay, got about equal lows. So no matter what, we can expect them, and I don't know what this does, but we can expect them to want to come below these lows. Okay, they want to go below these lows right here. Let's see if they go up first. Let's see if they go up and run liquidity up here first to go below. Let's see if they do this. Let's see if they come and do something like this. Come on, this damn thing. Here. Okay, let's see if they do something like that. I don't know what happens. Let's see. Okay, so they're breaking down. Let's keep these trend lines updated here. That's pretty good. That trend line's pretty good. Okay, this is too perfect though. I think they're coming back up here. So everyone that sold here right now is being rewarded, and the market doesn't like to just reward people. Okay, so let's see what happens. Let's pause it. Make sure we extend this line here. Okay. So this would be one touch, two touch, three touch. So this fourth touch, pretty high probability, right? And then we'll draw a line right here. We'll draw a line right here so that you know where we're expecting it to come. That's where we think it's going to take out liquidity. So let's see what happens. So we went above the trend line, right? And bam, right above that trend line. Now let's see what happens. And right down below. Alright, so you guys just saw that. I went to the Dow. I went to a area of the chart I have not seen. We drew out what we just discussed, and the market did exactly that. Okay? Equal highs, downward sloping line. Everyone's selling at this area. Okay? It gets to a certain point, breaks down. Everyone thinks it's going down, turns around, heads back up, takes these people out, and then dives down. Alright. So, wanted you guys to think about that. Think about liquidity when you're trading. Think about if you're in a position to be hunted. Okay? And remember, it's all about location when you trade. Alright? And they're going to use your orders as the gasoline to put in their money-making machine to ride around the market. All right, if you want to profit more, you have to be the one selling them the gas. Okay, not being the gas yourself. And by that I mean you need to be putting your orders where people put their stops. All right. So if you missed this, or you didn't get out here, and you knew that it was it was going to be bearish and come down here. Look at this. It took out all the liquidity here too. By the way, all the liquidity on this line. Everyone that bought. Where do you think their stops were? Below. All down in here. Took them all out. Okay. So just think about liquidity when you trade. It's a real thing. It happens. Once you see it in your charts, you can't unsee it. Okay, and it'll really help improve your trading. All right, this was not short. It was 20 minutes, but I hope it was fun. I hope you enjoyed it. If you could throw me a like on there, I'd appreciate it. And I'll see you guys in the next one. Next video is going to be about price being an advertising mechanism. Okay? All right, peace.